All right, stock market analysis. We're going to look at SPY. Where does this rebound stop? And maybe it stopped already. We're going to look at the weekly cycle analysis in SPY, and I'm going to give you two scenarios, both negative. I think you're going to find this pretty compelling. Let's take a look here at the S&P 500. So I've shown this chart before. Actually, there's a ton of information on here, and if you're looking at this for the first time, you're going to say, holy cow, how can anybody make anything out of that mess? I've had people call our chart spaghetti, or that it's overkill of information. Actually, it's not. There's one price chart on here. There is a cycle analysis on that price chart, and on the bottom is our guides. And in addition to that, I'm showing you a map. This is the only chart that I ever do show you the map, because I really want you to understand the waves of the market and how there is important information from them. So this is the SPY, the S&P 500 analysis. This is a 10-week chart, but I'm only going back over here to show you this, which takes you back a couple years into the beginning of 2021. And what we're looking at, of course, is cycle analysis. So on the bottom are the cycle brackets. These are simply guides. They show us the rhythm in the market. And what we do is look for alignments in these average lengths. The distance from a low to a low is called a cycle. So in other words, from the origination point to the next origination point is where a cycle is. So these are the minor cycles. Those are 9 weeks long. Every single chart has its own unique cycle rhythms. So don't try to put 927, and this is 27 right in here, on another chart, because it won't fit. You really have to do the analysis and decide what the common energies are to that particular symbol. So you can see in here, here's your dominant cycle made up of the 3 minor cycles, 9 and 27. This is the map of it on the bottom. And you can see in here that this describes exactly what happened in this dominant harmonic family. It gave you 1, 2, and 3 minor cycles. They were being driven upward by upward momentum. This is the askSlim proprietary momentum indicator for the weekly. That is the reversal scout. Level 4 members get this for their charts on Thinkorswim. And that gives you the momentum conditions. It flattened out over here a little bit, but then got strong and then came down for this corrective period. These yellow ovals are areas where the declining cycles are in alignment. In other words, these are the declining phases. Now, you might say the market was going up while this was declining. Well, that's not the case. This essentially, the reality of the upward energy means that this is actually how the cycle resolved itself. It was a positive cycle. You can see that on this map as we look at what are envelopes that are used in the true cycle analysis by JM Hurst. He was kind of the godfather of this. So here's the next cycle. You can see in here that's the minor cycle. Then this went up, made a new high like it's supposed to. The higher highs, higher lows are an uptrend. And then it failed and got below where that low was. That was our warning. And that was this head or double top, however it was formed right in there. And then the next rally in here failed early, which it's supposed to because it broke down. And they all both declined right into this time frame right over here. And you can see where the bottom on the ideal was right over there. But they don't always bottom right on the ideal. So because this was negative right in here, the next cycle should fail. In other words, it should rally and not get to a new high and then decline and get below the previous low. It did that perfectly in this minor cycle. So back right out over here, May 2nd, May 9th, we were talking about a bottom right in there. And that would be the bottom of this minor cycle, but it would be affected by the next rally would be affected by the negative trend that we had in there and the negative momentum, as you can see here on the reversal scout. It would fail, as it didn't here, by getting up to these levels of resistance. So we talked about a rally. We said, you know, the bottom here was about 410, 411, probably getting up over here to 418, 419, which it got up this week to about 417, with an outside chance that it gets up here to about 421. So 411.50, 418, 421, the period of false rally as it comes up to the resistance targets. It did that exactly. It did it, you know, a couple of weeks later than we thought, but that's well within any normal variances, and then it got up right over here. You are here on the map, right there. You can see that. It's this rally right in here. And that rally probably is not over. In other words, if the market gets a pullback, where would it pull back to? Well, into some support level, somewhere right in here. So that's about 403 on the SPY. And with the market selling off right now and short-term patterns suggesting that it would, that maybe 403 is where it gets to the early part of next week, and then begins to move up again. So again, we're looking for this area of 418, 421 is a possibility still out over here, and it could hold up into this mid to late June period before this next cycle begins to turn down. So this is this period of false rally. This is where it shows up on the map where we said you are here, and this is what we're projecting right there. So in other words, this minor cycle should fail. It should take out this low, but it doesn't have to. I'll show you another scenario in a moment. And there's your 20% bear right over there for the SPY. And then you get another rally and then another big decline. And right now we're projecting to about 350 on the SPY. That's the 50% major support, a major fib. And this is the cycle trough where we're projecting September, October, and potentially as low as 335. So this is the major fib extension where you see this blue area, 353 to 335. So that's actually what we're looking for when you see that. Now, what if this was a little bit stronger in here? And there are certainly people out there that think this is 2020 and 2021 again, and the market could surge up to new highs. I would give that about a 3% probability versus a 97% probability of a big decline. But this is what we think would be the normal, where it fails in the next few weeks and then moves down again. You can see those major resistances that are in there. And the intermediate resistances that are in these pink and red shaded areas, and the support, this minor support area is all right there. But now, if I want to look at a little more positive scenario, which is less negative for the near term, it looks like this, which says that the market actually could, you know, get a little bit higher, come down, hit supports, move up again, and that would take it out into August over here, where it goes into a period of some significant chop, but then you get into this area here where it's likely to get slammed again, and that doesn't change our projection much. This would be a 365, this would be 349, 350 right over there. If it was this scenario where the market goes into a range before it really gets sold again. Either way, it follows this map right over here, which is the highest probability, which means that getting through this area here for that big resistance at 443 is just a huge long shot for that to happen, and much more likely that this false rally does fail in those areas that we're talking about, and that it does begin to move down in a very significant way. So is it this a more positive, super negative scenario anyway, or this one where it just doesn't, it's not able to get any real rally going and then heads down to those areas? Wanted you to see both of those. One is very negative, as you can see, and one is negative. And just fails from a little higher level. You want to learn more about our style of analysis, go to askSlim.com and go to the workshop. Go to the main page and scroll to the workshop area. There's a tab there, and there's a free video there you can watch, and it tells you about all of the now 23 different modules that we have in that workshop. You will learn more in that workshop about analysis, charting and chart analysis, and this style than you ever could or ever anywhere in the world. I spent 2 years writing that, 6 months producing it, and it is absolutely golden. We have had hundreds and hundreds and hundreds of people that have invested in that, and it's really worth going to take a look at. And also remember, Matt earlier in this in the Market Week show, if you're watching just a clip of this, showed you what our level 2 membership includes, and you get all of our analysis on all 25 of the futures that we do analysis on by using the Futures Hub, and that's for level 3 and 4 members. So it's just fantastic with all of our analysis in there. So I want you to just think about all of that and how you can become a premium member at askSlim.com. That's my analysis. Bearish or very bearish, you can take your pick on that, and I hope that it was extremely informative to you. I want you please to go to our site and become a free member if you don't want to become a premium member, just so that we can send you information and you'll be able to know when these shows come out. Do subscribe on YouTube, click that notification bell, and you'll know when we put videos up there. And do give us a thumbs up, like this video, and watch our member videos in the playlist. There's some great information in there, and you'll get a taste for what we do. Our videos, we have over 600 in our library. It's just incredible. And on Twitter, follow us at askSlim. For any questions, write to Matt at askSlim.com.